Hi, let me start thanking each of you for having been with us in this very interesting journey as an investment advisor. I thought completes 10 years this year. We have been through uh, a big bear market and then a reasonably strong bull market, and we are now going through another critical phase when the markets are very choppy. It has been a very interesting phase. Our model has changed and we have made it completely on the direct option. We have changed a lot of things in the way we go towards making investment choices and how we scale those choices, how we manage them. And over the years, we have been focused on continuously making this investment process more robust, something that will always keep you ahead of the market. But being ahead of the market is never easy. It is something that is fraught with pain because the markets can be more irrational than we expect them to be. While we make the valuation choices quite sharply based on an investment being attractive for the long term, an investment that we think is fair or attractive can become cheaper and very cheap over a period of time. This has happened with some of our investment choices this year. Subsequently, those choices recover very fast and actually contribute handsomely to profits over a medium term. This has been our experience in the various themes that we played over these 10 years. And we continue to believe that this will be the experience going forward. If you notice, 2017 was a year in which we booked a lot of profits. Until then, we had traveled with you by advising you for aggressive investments in mid-cap funds, in banking funds, and in various other themes. But in 2017, when the valuation started going expensive, we started booking profits in these funds with a clear intention. We wanted to walk you to safety. Our belief was that someday the trend would reverse and it could give us a lot of losses, and that has more or less been the trend. We are very happy that we walked most of the funds out in the mid-cap space, and you will know that mid-cap is one of the worst performing spaces in 2018-19, this financial year. We have consciously avoided large investments in this space, restricting ourselves to the barest SIPs that we have been doing. On the contrary, we took some very high conviction calls, and most of you may have been perplexed as to why we were buying gold. We bought gold in the ETF and in the World Gold Fund, which is investing into manufacturing companies. The mining companies are gold. The idea was simple, that if there was a weakening of global markets, gold would again rally. Another trend that we had understood very clearly was that the global central banks had not bought much gold in the previous 5 years. Just to give you an idea, last year the RBI returned to buying gold after a gap of 9 years, which means right through the tenure of Mr. Raghuram Rajan, we had not bought gold. But we started buying gold towards the end of Mr. Urjit Patel's tenure, and we probably may continue to buy. There are other countries also which bought gold, and this is leading to a decent bump up. If you noticed, even that investment saw some rough winds for a brief period of time, but when market conviction returns in the themes like these, it would not give us time to buy, and it will rally very sharply. That is precisely what happened in gold. We have made other high conviction bets in the PSU space. We have made in the natural resources space. these are based on the structural reforms that are happening in India, which we have seen happening over the last 5 years. The benefits of these reforms are yet to really translate into the stock market. Before they could really translate, we are already running into another election. And as luck would have it, these have been going through a fairly rough phase in the first 2 months of 2019. However, it seems that this phase may not last too long, and these businesses would again return to being fairly valued. To give you a sense, these are very, very cheap now. We have bought them right from the time when they were attractively valued to the time they became cheaper and then very cheap. We have bought them at various stages. Now the trend seems to be reversing, and I would think that these valuations will again head north. It is never easy to make such contrarian investment calls unless we have the explicit support of the investors whom we advise. It is very difficult to remain steadfast to those calls. So if we are managing to hold our conviction strongly, you are a very strong reason, because you have supported us all through the way. Rest assured that over the next few quarters, your conviction will pay off and you would be ahead of the market. After all, the fact that you have trusted us, respected our judgments, and taken our advice on a continuing basis is based on the expectation that we will keep you ahead of the market. Remember, returns are not really the metric. If you are ahead of the market, the returns will definitely happen. As an investor, if you are behind the market, then you probably may suffer with long-term capital loss. But when you are ahead of the market, there could be some erosion in your portfolios. But when the markets recognize later what you recognized early, then you create long-term wealth. It is this process that we are following on your behalf and advising you to follow. And it is this conviction that you are showing in our advice, which I believe is extremely valuable in our playing a very effective role and in creating long-term wealth for you. Both these are deeply connected, and I again wish to thank each of you for this. The coming months will see a definite change in market favorites. You are going to see a lot of rotation happening, and in this rotation, I believe that some of the themes that we are getting will pay off very well, and we will also get an opportunity to invest in some of the themes that we have avoided. Importantly, the smaller sized companies and mid caps is one theme where we have been extremely cautious in buying into the mutual fund schemes. I believe that we would get an opportunity sometime later to look at these and then buy them gradually and then hold them for extended periods of time. Thank you very much for being with us, and I do believe that this journey is only going to get better from here, and we remain committed to make those high conviction contrarian calls which will deliver above average investment returns for you over the long term. Thank you.